Hi there. Good morning to everybody. Thanks so much for tuning in to Indian Open. Hope all of you are safe and staying fine. It's just that kind of a day, isn't it, for the markets? All of us are a bit tentative about what the near term could be, and more so in today's session, simply because there are not enough convincing directional cues, if I can use that term. Usually, I'm a lot more clear about what the screen is telling me and how the day ahead could be like. Nobody's expert enough to really predict that. I think our technical experts are better placed, but just that the screen at times tells you a story. Today the screen is not quite telling me a story. The global markets were looking okay. US markets were trading in the green. Asia, mixed bag of sorts. SGX indicating a start which is about 40-50 points in the red as well. So it's kind of difficult to call what will happen. We might start off lower, but I think the technical calls would still be on the bull side, simply because we had a trending day yesterday. So maybe not too much of a clarity on the market side. Maybe stock specific would be the way to be. Keep in mind the coronavirus news isn't the most positive, viewers. I know the world over, the markets are looking forward towards the reopening of the economies, and that's the big sentiment trigger. But the number of virus cases have jumped. WHO said that yesterday was the biggest case in the world, the single largest day, a single largest rise in cases. In India too, single largest rise in cases. So not the most pleasant of news, but let's wait and watch. Maybe the equity markets would digest that. But lots of stocks in focus today, really. Lots of stocks over the last few days. I think we'll talk about all of them with Parthiv Shah of Tracom Stockbrokers. He'll be joining us any minute now. We'll also get in our technical experts a bit later on. Get in Deepak Jasani from Hdfc a bit later on to talk about the stock of the week, etc., etc. So lots to look forward to in the next 1 hour of trade. If Parthiv is with us, I would like to kickstart a conversation with him. Do we have Parthiv? Okay, I think we do have Parthiv. Yes, Parthiv, good morning. Let's start. Thanks so much for joining in. What's your sense, Parthiv? Today is not quite as clear as what the last of the few days would be, but do you sense that the biggies could come to the party again? Yesterday we had Reliance, Hdfc Bank, TCS, etc. doing well, Bajaj Finance doing well. Do you think they'll continue?
Absolutely, Neeraj. My sense is that, overall, if you look at some of the key results, and especially results from some of the biggies, and no doubt, I think it's little early to judge, because until Q4, we know only the last 10-15 days of March were hurt in terms of sales or in terms of disruptions. And one's going to get to know that how Q1 is going to pan out, and especially post Q1, what sort of management commentary comes out in terms of the demand. So I think so far, at least the results from a lot of biggies, and especially in the pharmaceutical sector, has been quite resilient. So Neeraj, my sense is that at least we are out of that free fall stage of the market that we had witnessed sometime in March. And we believe that even recently, if you look at the market movement, a lot of predictions in terms of levels of even 8,700 being broken, but somehow that has been respected, and most of the heavyweights of the indices, and despite the fact that bank Nifty, which is almost 33% constituent of the Nifty, has been in a declining curve, I think the markets have held up quite resiliently. And I think one of the reasons that we had also cited out few weeks ago is that we can attribute this coronavirus episode into different phases, and now we are in that phase where slowly and gradually things are opening up. So markets might start more forward looking as compared to in the past when there was a lockdown. So my sense is, yes, I think next 2 to 3 months we might probably land up seeing the worst in the market or worst in some of the stock levels, and slowly gradually I think value investors will chip in, because long-term opportunity in the Indian stock markets at current levels and valuations looks extremely compelling, not only for the short to medium term, but even if I were to look at the last 5-10 years of valuation, I think they haven't been so good what it is right now.
Yeah, actually, I was looking at the Morgan Stanley report. I know today that's come out today. I know financials are not the most favored topic right now, but Parthiv, Hdfc Bank, and I just bring that out. Let me actually just try and get that for our viewers so that I don't misquote what I'm trying to say. But it's a very interesting note that they've put out. Amongst that, they have compared the valuations of Hdfc Bank on a price to book, price to earning, and price to PPOP. And on all three, compared to 15-year means, Hdfc Bank is trading at about a 35 to 40% discount. Is this the fear of the Aditya Puri's exit which is keeping people away? Because Kotak is not trading at such discounts, Parthiv. Would you be a buyer in Hdfc Bank?
An extremely valid and a very rightly pointed out argument, Neeraj, from your end. But yes, I would still be a buyer in HDFC Bank because my sense is, I think despite the fact that Mr. Aditya Puri might no longer be at the helms, but I think the process that he has set up over the period of years, the next generation team that he has, I'm extremely confident, even the strength of the board that they have, wherein I'm very confident that the successor would be equally good. And I think more importantly, this discount is also because of the fact that there's some fear that some of the unsecured lending that HDFC Bank has done might lead into slightly elevated stress, but I have full faith in their ability to underwrite loan accounts. And I think looking at the results that they have shown, and again, this COVID episode has taught us one thing, that companies where I think there's going to be balance sheet strength, there's going to be brand strength, they are going to benefit. And it was evident from the fact that they garnered more deposits. Slowly and gradually, the cost of funds are coming down. They are in a position to reduce their savings account interest. So I think they are going to be very, very resilient. Both Kotak Mahindra Bank, HDFC Bank, they are the type of banks, they know when to slow down their lending if they don't find the situation very lucrative, and they know how to conserve cash, preserve the balance sheet strength. And once things improve, I think they'll be the ones which will be like taking a lot of market share from a lot of peers. And even Neeraj, at this juncture, last 10 years compounded annual stock growth rate of HDFC Bank is still hovering at around 8.5–9%. Look at State Bank of India, despite being almost 3 times in terms of the size, because of the PSU pedigree and because of the way they have allocated capital, I think it has been negative last 10 years in terms of the stock return. So definitely worth going with these private sector banks, especially likes of HDFC Bank and Kotak, which are our top favorite at this juncture.
Okay, yeah, but the absolute financial performance of some of the financial names is looking very, very weak. I mean, viewers, I wish I could show you this on my phone. I can't. It's there on our Twitter timelines. It's there on my Twitter timeline as well. But just the kind of decimation that we've seen in some of the financials is pretty strong, and you've got to be mindful of that. Okay, just before we get to the stocks in news, Parthiv, the stocks that have been in focus the last 2 or 3 days, and telecom in particular, more also after Bharti's numbers, even Vodafone Idea got a bit of a bang. I ask this question to my guest every day because you never know what a viewer might miss on any given session. Would you believe that after these up move that you've seen in the prices, telecom still provides you a bang for the buck if you go in and invest afresh? Why or why not?
See, Neeraj, I do recollect our past conversations, even at that point in time where Bharti was hovering at levels of 350, 400. And we had always talked about the fact that already we've seen a lot of consolidation in this sector. From 7 to 8 players, we were at 3 players. And out of those 3 major players, one was extremely weak, which is Vodafone Idea. So I think the way Bharti Airtel has really defended its market share, really defended its customer subscriber base, and the way they have improved efficiencies in their network, the way they have improved costs, I think is now easily showing. And at a point in time where even Reliance Jio is not in a mood to kind of further be more competitive in terms of predatory pricing, they are also slowly and gradually, rather some of the plans of Reliance Jio at this juncture are almost 15 to 20% more expensive than plans of Bharti Airtel and Vodafone Idea. And most importantly, the commentary from the Bharti Airtel, the body language, the messaging that they're given, that they're still not satisfied at 154 ARPU. They're looking at 200 ARPU very soon, and probably a normalized ARPU that they're expecting is 300 rupees. And I think, Neeraj, I won't be surprised if that comes, because even look at the African business. Their African business reported ARPUs of $2.8. So in fact, the ARPUs, current ARPUs of African business are higher than the Indian business. And we know what sort of operating leverage can take place with such ARPUs. So I think we are extremely confident, even if over the next 2 to 3 years, if the ARPUs of Bharti Airtel were to double to 300 levels, it's going to be humongous. And I think it's not only like a telecom carrier, Bharti is also going a little bit like Jio Partners way, where I think they're moving more towards doing a lot of partnerships. They already talked with lots of big players like Microsoft, Google, Cisco, and they are also building an ecosystem. So we have seen what sort of valuation Jio has gotten. Similarly, Bharti can fetch some sort of a deal like that, they'll be able to deleverage. Plus, I think they'll get multiple re-rating even from here. So we are bullish on stories like Bharti Airtel even at current juncture.
Okay, bullish on Bharti Airtel even at current levels is Parthiv, and I'm not surprised a bunch of people are, and the reasons may vary, but very interesting. By the way, viewers, I must tell you, just before I get to my colleague Nikki, that today, sometime in the day, I urge you to log on to our website. We're putting out a story on why is it, or what are the triggers that could be or could not be for the Bharti ARPU to move up from the current 154 to 200. I think we as journalists need to question a lot of assumptions, and I think that's what we are trying to do today. My colleague Somit Sarkar has written that story. It's a very nice story. I urge you all to look at it. It's such an active pocket. I think those questions are very, very valid. But what we do usually at this time is get in my colleague Nikki to talk about the key newsmakers or the key stocks in focus today, the ones that are likely to react. Nikki, good morning.
Good morning, Neeraj. I've picked up all the results which are better than expected and strong show. First one that I'm going to begin with is with Bajaj Auto, where the revenue is down by 8.5%, but then profitability is flat as compared to the expectation of a contraction year-on-year basis. EBITDA to an extent, margin expansion has been, aided by the inventory, change in inventory, better mix, and benign forex. Demand prospect, however, remain subdued for high margin segments such as three-wheelers and exports. Fall in global commodity prices and adverse currency trend is also expected to impact the overseas demand per se, as for many brokerages. Nevertheless, the numbers are better than what the street was estimating. Jubilant Foodworks, decent show out there, but then the commentary remains to be very positive. Revenue growth at 4%, more than expectation. There is an EBITDA margin expansion by 180 basis points. Same store sales growth is contracted by 3.5% in this quarter, and we've seen the profitability hit on account of that one-time provision being made to an extent of 32 crore towards the Sri Lankan arm, and there is a COVID impact which has been reflected on the bottom line performance of the company. In the commentary, it said that the Jubilant is now covering 87% of the delivery area with 938 shared operational stores out of a number of around 1,300. This number is expected to reach out to 100% by June. So clearly some amount of positivity out there. Also, we're looking at JK Lakshmi Cement, where the revenue is down by 9.5% due to lower volumes. But then the EBITDA performance, just like most of the other cement players, is more than what the street was estimating. The margins have come up at 19% as compared to 11.5% on account of the improvement that we've seen in fuel prices, on account of the benefit of inventory of pet coke, which has been playing out for cement industry in this entire quarter. Also, we're looking at Kalpataru Power Transmission, where the board has allowed a buyback of 4.75% equity at a price of 275, which indicates a big premium of as much as 43% as compared to the previous market price. Aviation stocks, they are expected to be in focus. Some positivity out there. The minister has come out, the aviation minister has come out and said that the domestic civil aviation operation will recommence in a calibrated way from May 25. And last on the list, we have Reliance Industry, where there's the news again of KKR and Company, which is an active discussion to pick up stake in the counter for a Reliance Jio platforms. So that's again a counter that is expected to remain in focus today.
Thanks for that, Nikki. Well, clearly some very strong results. Reliance remains in news. The rights issue is on. By the way, that RE that you can buy. Actually, Parthiv, coming on this one, just before we get into some of the other newsmakers, there's this whole buzz around how that rights issue instrument is being bought into. It's in trade to trade. But can you throw some light here? Can retail investors who are listening into it right now, if they are bullish on Reliance in the very short term, can they buy that? Would it be advisable? And what is that instrument essentially? What does it entitle you for? Any idea?
Absolutely. So, Neeraj, see, I think this particular rights instrument, which is right now traded on the markets, it's not something that we are suggesting the investors for a very short term. You take it in this way, that right now, if at all I were to purchase, say, 100 shares of Reliance, and this is a talk especially for the retail investors, it would cost me somewhere around 1450 per share, which is around a deployment of 1,450 rupees. But if at all I still want to play Reliance Industries for long term and I don't have so much of money, then what I can do is I can pay this 200 rupees, which is the premium over and above the current partly paid up money, which is 314.25. So it comes to somewhere around 500 and something rupees. So right now I land up owning say 100 shares of Reliance through this rights issue entitlement participation buying it into the market, paying only somewhere around 500 and something rupees, and the rest of the money, as and when the call option is obtained, which is going to happen over the next almost 1.5 years, I will still be owning Reliance Industries shares, which will get fully converted from the partly converted at around 1450, 1470. So I think this is a very interesting instrument even for long-term investors who at this juncture want to own Reliance Industries shares, don't want to buy it at the current market price, and yet be part of this story for the next 1.5 years. But again, I think it will be a little risky for somebody who's trying to play a sort of a trading game in this particular premium instrument, because we know it's in trade to trade. It can't be done on an intraday basis. And from 29th onwards, I think once the renunciation date is getting over, these shares won't be trading. There'll be new ISN which will have the partly paid up price. So I think investors have to be little, retail traders have to be a little careful in this instrument. It's purely meant for investors who want to participate in Reliance Industries for long horizon.
Any risks to this instrument, Parthiv, or anything to watch out for when it comes to this instrument?
See, frankly, there is no real risk except for the fact that the premium were to go lower. So I think there's less amount of risk for long-term investors, because we know for the fact that Reliance's journey for the next 1, 2, 3 years is looking quite exciting. And if at all somebody gets a call option to over the next 1.5 years to get Reliance Industries at a share price of 1450, we might not know. I think maybe sometime in November 2021, Reliance could be quoting at 1800, 2000 levels. Even at that juncture, if one participates in this instrument at the current premium, they still get it at around 1450, 1460 levels. So risk is only short term, where the premium might go down or the Reliance share might go down, and so would be the partly paid up shares which will get separately listed. But other than that, for a very longer horizon of 1.5, 2 years, my sense is I think it's not a very big risk.
Okay, Parthiv, interesting. Thanks so much for giving us those updates. Stay on, Parthiv. So much more to talk about. Those results that Nikki spoke about, Jubilant, JK Lakshmi, we'll talk about all of them. But it's 8:45 or 8:46, about time that we get in our technical and derivative experts on board as well to try and opine on how the markets could do today or in the near term. Samit Chavan, Aditya Agarwala with their thoughts. Gentlemen, both of you, good morning. Pleasure having you as always. Thanks for joining in. Samit, let's start off with you. Weekly expiry today. The SGX indicates a start in the red. What does one do post-open? Samit, I think, okay, I didn't think Samit could get my answer. Maybe I can try with you. The same question to you, really. Good morning.
Good morning, Neeraj. So yes, SGX is pointing towards a gap down opening of about 25-30 points for our markets, but traders should watch out for 9,000 on the downside as a key support level. Index was finding it tough for the past couple of trading sessions to cross that level. Now that we've eventually crossed that level, my sense is 9,000 will act as an immediate support on the downside. So if index does hold at 9,000 levels post a gap down opening, so just watch out for 15-20 minutes of opening trade. If 9,000 levels hold, probably a good idea to go long on the markets. My sense is market might just pull back to levels of 9120 on the upside or about 9200 also. It will make a dash towards that. But initial targets will be 9120 on the upside with a stop loss somewhere around 8950 to about 8900 on the downside. Overall, the trend looks like it is reversing from the lower end of the range, especially looking at the bank nifty trade yesterday. It did pull back in late trade, and my sense is the short covering rally there will eventually take the bank nifty high to levels of about 18,000 easily on the upside.
Okay. Samit, what is your thought? It's weekly expiry as well today. How do you approach the trade this morning?
Morning, Neeraj. In fact, in last couple of days when, Nifty first on Monday breached 9,000 and, stepped towards 8850, 8800, we were not convincing, we were not convinced with that particular decline, and we were skeptical. And, considering some contrarian chart structure that we were seeing in Nifty as well as Bank Nifty on hourly chart. In fact, a couple of days back, there was a bullish home pattern that was confirmed on daily chart on Nifty. So we were bullish, and yesterday also in the first half we had recommended the call option in Nifty as well as Bank Nifty to our client. In last 1 hour we saw strong surge, the kind of short covering that we saw in 1800, 1850 and 9,000 call option. So 9,000 for the day would act as a support, and ideally if Nifty comes around 9,020, 9,040, that would be a buying opportunity. Risk reward will be favorable. So we believe that any dip towards 9020 should be seen as a good buying opportunity for a target of say 91.20, 91.80, and one can keep a stop loss around 894. So we would be buyer in any case.
Okay. So in light of that, and let's assume that the call from both of our experts is that don't go out and do everything on open, but if there is a bit of a dip, then you might be able to buy. What are the stock specific calls? And I reckon that all ideas are on the buy side. Samit, can I start off with you? Your ideas for the day today?
Yes, definitely, Neeraj. We have a couple of buy calls. First one from the pharma space, which has been buzzing since last couple of months. So Torrent Pharma is the one stock that we have selected for today's session. If you look at the overall daily chart, after a good recovery from lower levels, this stock went into a consolidation mode. And yesterday, in the morning session itself, we had confirmed a price and volume breakout from its recent condition zone. So Torrent Pharma, from here on, we would expect a good move in this particular counter. And as a disclosure, we have recommended this to our clients as well. So one can go long at current levels. Stop would be around 24.20 and our target would be around 25.80. Our other buy call would be an Adani Port, which has been buzzing since last 3 weeks. If you look at the overall price action, the stock has given stupendous recovery from low levels. And in fact, in last 3 days, stock has surged from its low levels. So we expect Adani Port to move higher. 334 is our near-term target. It can be bought with a stop around 340.
Okay. Aditya, what about you? Your ideas?
So I've got a pharma buy as well. The pharma stocks just continue to go up, Neeraj, higher rise, higher lows. So the stock on my radar is Cadila Healthcare. Stock is on the verge of a breakout from a bullish flat pattern, and the chart looks extremely bullish at the moment. So one can go long at current levels of 337. I'm looking for an initial target of 350 on the upside. Provided 350 also process, we might see levels of 370 on the upside. So definitely a long on Cadila Healthcare with the stop loss at 328, the initial target of 352. The second stock on my radar is Godrej Consumer Products. Stock is after a long correction started forming higher lows, higher highs, and does look attractive at current levels. One can go ahead and buy for target of 610, keeping a stop loss at 536 on the upside.
Okay. Just very quickly before we get back to fundamental chat, Samit, yesterday was a bit of a consolidation for the telcos, especially Bharti Airtel. Would you reckon that it was that, and would you be a buyer here? Do you see higher targets in the current series?
Certainly, yes. In fact, within this space, this was one of the outperforming stock after Reliance. In fact, if you look at its overall price action in last 3 weeks, the stock has been giving a steady move. A series of higher highs, higher lows can be witnessed. And day before yesterday, there was a decisive breakout seen in this particular counter. Yes, yesterday we saw mild profit booking. In fact, if this profit booking extends a bit and stock declines towards 585, 580, that would be a good buying opportunity. Risk reward would be quite favorable. One can go long in the zone of 585, 580, keeping stop loss somewhere around 562, and we would expect the stock crossing 600 points.
Okay. Now some result reactions, and it'll be interesting to viewers. Please keep in mind. So let's start with Jubilant FoodWorks, and then I'll tell you why I was a bit skeptical. But let me first ask about the results performance to Parthiv. Parthiv, what do you make of it? The expectations were the same-store sales growth would correct about 7-8%. It's corrected 3-4%. I personally think, Parthiv, that the result estimates have had no bearing in for the Q4 or for the current quarter. They hold no meaning. The absolute performance matters. Did you like the absolute performance and the commentary, or would you believe that the April to June quarter could throw up some skeletons and people should be wary?
See, Neeraj, no doubt, probably the April to June quarter might throw up some skeletons, as you rightly pointed out. But I think overall commentary and overall performance, I believe we are very satisfied. A few reasons. One is, I think the company is in an extremely good position. At the start of the show, we did talk about the fact that now consumers are looking at a lot of brand perception, and Jubilant Food, especially in this category where I think one is really worried about what sort of hygiene standards are maintained, their customers do have sort of a connect in terms of the brand perception and sort of the safety. And most importantly, I think in past two quarters where we heard from the management con call commentary that they were facing a lot of unorganized competition, which means a small mom and pop shop, which is also on Swiggy, Zomatos of the world. But now the good thing is that the brand perception can't even be better at this juncture. People are kind of focusing a lot on delivery-based food models, and I think Jubilant Food this time did talk about the fact that 2/3 of their revenues comes from the delivery model, delivery or the pickup model. And this going ahead, my sense is going to increase, because even post opening up of the lockdown, I don't see a reason why a lot of consumers will flock into the restaurants, even the traditional dine-in restaurants, and just crowd it. So I think a lot of people are still going to believe in home delivery of food, especially over the weekends. That's where I feel that Jubilant Food is in a very good position. And yes, you rightly pointed out that we have to look the entire quarter as a whole. But still, if I look at a normalized quarter of January and February, where the same store sales growth were quite healthy at 7.2% in January and 13% in February, goes to show that as and when things normalize, I think they can really do well. And they are masters at cutting cost. I think they have managed the cost overall extremely well. And my sense is, despite the fact that it's slightly expensive, which I believe it deserves to have, but over the longer horizon, if you look into this stock after the correction, I think it looks really good.
Okay. By the way, I'm getting some news flow. Maybe it is slightly dated, but or dated, I mean, maybe it's coming a few hours earlier, but apparently the US Senate has passed the bill to delist Chinese companies from exchanges. I think there is an overwhelming approval, and that could lead to Alibaba, Baidu, etc. being barred from listing on the US exchanges. This essentially is the upping of the rhetoric, and to my mind, the single biggest risk to the equity markets as well. You might be a bit of an uptrend right now, and COVID-19 is a big threat looming at large. But I think the US-China spat, if indeed it deepens, could well be one big overhang on the market. So be mindful of that. Maybe it's coming a few hours earlier, as I said, but this is one big thing that people need to watch out for. Okay, let's try and assess what could happen to Jubilant on the charts as well. Aditya, it's not a stock that has fallen quite a bit in the last few days, but it could rise today. What would your approach to trading Jubilant be?
So Neeraj, honestly, I don't, looking at the charts, I don't believe that the chart is too bullish at the moment. It is oscillating between 1470 on the downside to about 1600 on the upside. I would be very careful if the stock breaks 1470 on the downside. I'll be out of all long trades if I am holding any long trades. On the flip side, if it opens somewhere around 1550 or about 1555 on the upside, I might just take a small bet for a long trade for targets of 1600 to about 1520 on the upside, with strict stop loss somewhere around 1485 to about 1470 on the downside. Because if 1470 breaks, I'm looking at a downward target of about 1200 easily on the stock.
Okay, well, do watch out. Jubilant Foodworks, though, might have a good start. Parthiv, very quickly, I know you track mid-cap cement very, very closely. Any thoughts on JK Lakshmi results?
See, very good results in terms of improvement in the operational performance, and we know a lot of cement companies are benefiting from the lower raw material cost and, more importantly, lower fuel cost, and even the logistics cost at some extent are also helping them. Key will be for players like these in the mid-cap segment would be how well they're able to ramp up their volumes, because a lot of bigger players like Ultratech, Ambuja are giving a lot of competition to the mid-cap players, because they are far better in terms of their cost efficiency, and to drive volumes which have been in a declining curve, they might land up or retorting to some sort of price declines. So I think that's going to be an important observation to watch out for. But overall, I think select names in the cement sector are well placed, and if I have to pick something in the small and mid-cap space, at this juncture, I would prefer Heidelberg Cement over JK Lakshmi.
Okay, Parthiv prefers Heidelberg over JK Lakshmi. Having said that, so Heidelberg was up and about yesterday. I'm not quite aware of the fundamental valuations currently. We'll ask Parthiv about the relativity as well. But JK Lakshmi numbers were good, and maybe that stock could react today. So that's why we've got to be mindful of that. So viewers, remember, watch out for, of course, Reliance and Bharti Airtel and that instrument that Parthiv spoke about. Watch out for Jubilant Foodworks. Watch out for JK Lakshmi. Those are a couple of others. And I dare say you need to probably also watch out for what Hdfc Bank and the others do, because yesterday the Bank Nifty was propelled in large portions by what Hdfc Bank and ICICI and Axis did. IndusInd Bank was really gasping for breath in trade yesterday as well on a big day. So maybe some of the stronger banks could get stronger. Bajaj Finance could get stronger. It would be an interesting stock to talk about with Samit Chavan as well. But here come the first rates on the pre-open session. We'll make it quick because the pre-open rates keep on moving around here and there. but the first rates could well be showing some bit of a downtake, or at least the pre-open rates will show some bit of a downtake, because the SGX was anyway showing a start which could be marginally in the red. So the first rates all over the place. We won't have a 2% uptick on the Sensex for sure. So let's give these rates a chance to settle down. Are we seeing any reactions? That's what I'm trying to see on specific names. So Bharti Airtel, this 7% downtake. Okay, let's just give these rates a chance to settle, viewers, really. Reliance Industries would be an interesting one, simply because there could be strength in that one. So do watch out. We'll be watching out for Bajaj Auto, simply because the results were so strong. The commentary seemed okay. 7.5% or a 10% first few ticks on the pre-open session. These will settle down, but I wouldn't be surprised if Bajaj Auto has a start in the green. So we need to be monitoring this one for sure very, very closely. The other ones that I want to very closely watch is JK Lakshmi Cement. Well, looks like starting off 10% higher. Indigo, and if indeed the operations resume, airline operations, then maybe Indigo and SpiceJet could have a good move too. So that's the other one. Don't quite see Jubilant Foodworks amongst the list of the top performers. So maybe a small uptick and not really too much. Jubilant Life is trading in the green, but don't quite see Jubilant Food out there in the list of the top performers, so be mindful of that. But yeah, as I said, I think Bajaj Auto and the likes are the ones which are really piling on. Jubilant Foodworks has a 3% uptick. Maybe it could do more. Let's see, about 40-50 rupees. Let's wait and watch how much this one gains. The other one is, of course, Page, which had a big rally in trade yesterday. Would be interesting to see if Page can build on from where it left off in trade. So these are a few names that I would be watching out for in this session. Actually, Parthiv, coming on Page Industries from a 17,100 rupee mark 2 days ago to 18,652. I'm guessing the reopening effect probably helping this one too. It's not as liquid either, but from a long-term investor's perspective, is Page a stock to bet on?
See, Neeraj, no doubt. I think the stock has held up extremely well over these levels of around 17,000, 18,000. Even in the worst of times, we haven't seen a massive derating of the valuations or massive decapitalization. And I think the only sense that the market has is that all the products that Page Industries makes, I think, especially in both the categories, which is jockey and speedo, I think they are relatively very small ticket items. And I think post normalization of opening up, I think there is some sort of expectation that the normal volume growth will come back. No doubt, I think one will have to carefully monitor how the volume growth takes place, because Page has disappointed in past few quarters. It's not because of more competition, it's a surprising factor, but I think it's more about, I think, a lot of consumer spend. But being a low ticket discretionary spend, I believe that going ahead, we might see some sort of pent up demand. That is what markets will carefully look at. Not that I would like to go ahead and rush to buy Page Industries at these levels. Would love to monitor a couple of quarters and hear the management commentary before taking a very long term.
Okay, the pre-open rates are now cooling off, and that is probably the more believable number. But Bajaj Auto has had a big move. It could well not have maybe a 4% move. Maybe it could be a 2.5% up move. But the numbers standalone basis seemed good. Now, before we talk about them fundamentally, I want to get in a technical view. Samit Chavan, technical derivatives, the combination there, Bajaj Auto, how do you see the trends if it starts off about 2, 3, 4% higher?
Within the auto space, specifically two-wheeler space, this has been one of the outperforming stocks, and it has already given a stupendous recovery from low levels. But now, if you see in last couple of weeks, 3 weeks, the stock has been consolidating. So it has slipped into a consolidation mode. When on the higher side, the 200-day moving average placed around 2780, 2800 has been acting as a strong hurdle. So we would expect this stock gyrating in this band of 300-350 points, wherein on the higher side 2780, 2800 would act as a resistance, and lower side you would see some kind of buying emerging around its lower end, that is 2400, 2450.
Okay, Parthiv, fundamentally a Bajaj Auto, and what did you make of the results and compare it to Hero and TVS? Maybe is Bajaj Auto a preferred bet, or is it the other two?
See, Neeraj, not a time to really look at how are the volume growth numbers, how is the market share, because it's more about a time to look at the resilience of the company's financial strength. And purely going by the financial strength, what we were really encouraged to look at is almost a 67% conversion of its EBITDA into free cash flow. It's a strong cash generating machine, even in very tepid economic scenario, but purely because of the fact that we are a little wary on Bajaj Auto's growth plans or growth trajectory for the export markets, which so far have been a saving grace. And also going by the management's commentary that this 18.8% EBITDA margins might not be sustainable, I am more tempted to look into Hero MotoCorp vis-a-vis Bajaj Auto, because Hero MotoCorp predominantly has a far better market share in the rural segment. Almost 50% of the volumes comes from the rural segment, and we all know about the commentary of the rural segment, which is looking a lot better than the urban segment. Plus, I think the farm sector and the agri spends are going to look better. So in which case, I think Hero MotoCorp could surprise us on the upside in terms of the volume, and thanks to the all cost-cutting measures that they have taken, they might inch towards better EBITDA margins, maybe going even near to what Bajaj Auto delivers. So I think Hero MotoCorp would be a better bet purely on valuation and the rural corp.
Okay, and maybe that's a fair call too. The resilience of businesses would probably be the more important thing to watch out for. For a lot of you who are viewing in right now, I spoke to Parthiv about this fundamentally, and I'll speak to Aditya about HDFC Bank technically, but I just want to bring out the point that I saw in this Morgan Stanley report for HDFC Bank. Viewers, just bring it out to you. You don't look at 5-year averages because 5 years may be deceptive. You look at 15-year averages, and that's what tells you the resilience of a franchisee, right? So HDFC Bank, hear me out. The 1-year forward multiples, assuming that things don't get disrupted too much, HDFC Bank on a price to book basis is trading at 2.1 times. The 15-year mean is 3.4 times. On a price to earning basis, the 1-year forward is 15.5 times. It's not the right metric, but I'm still spelling it out. The 15-year mean is 20.5 times. The price to core PPOP, again a metric that actually a lot of people rely upon, 1-year forward is 9.1 times. The 15-year mean is 12.3 times. So price to book, price to core PPOP, on both of these at least, I think there is a discount available to the averages. Now, averages don't mean something in a scenario like COVID-19, which is very disruptive, and therefore you do not know what will happen. But averages do mean something over the long term. In 2023, hopefully, people will forget the pain in 2020 and move on to average valuations. And if you are indeed that long-term an investor, maybe some of these franchisees are giving you an opportunity. I'm not saying they are. I'm saying you got to keep in mind stronger franchisees and long-term average multiples. But let's talk short-term about HDFC, because we already spoken long-term with Parthiv earlier. Aditya, short-term, HDFC Bank gave a bit of a bounce yesterday. Would you bet on it more?
Yes, Neeraj, definitely. So on the downside, about 830 to about 800, it was a strong support zone for HDFC Bank, and in trade yesterday, in fact, back-to-back 2 reading sessions, we witnessed HDFC Bank actually take support at that level of 830, and yesterday was a good bounce back. We'll closely watch out for 870 on the upside. If that level is breached, then probably bulls can take the stock even higher. So a buy will be triggered above 870 for a target of 900 to about 940 on the upside, needed with the stop loss at 835 on the downside. But 870 should be watched out very carefully. If that is taken out on the upside, long can be triggered.
Okay, now that the pre-open rates have settled, let's just try and figure out what to do with some of the more active names. So, okay, Reliance Industries 1435. Samit Chavan, maybe repeat question, but I'm just still asking you. Reliance, would you buy it today on open at 1435?
Neeraj, although the stock is trading around support level, I would wait for some kind of follow-up move. So 1462, 1465, these are the levels to watch out for. In case Reliance sustains above that, then yes, probably a move towards 1500, 1530 cannot be ruled out.
Okay, so only conditional. I remember Samit was more bullish on Bharti Airtel seemingly from the looks of it. So pure play telecom might score, or the other one. The active stock in the last few days is ONGC because of the crude price uptick, 78.75. Aditya Agarwala, quick thoughts here.
Oh yes, definitely, Neeraj. There's a short covering rally in the making as far as ONGC is concerned. 85 to about 87 on the upside can be your target. On the downside, 75 should be a stop loss. Look to go long, and on ONGC, these stocks can actually give you a good 7 to 8% return on the upside.
Okay, and Parthiv, something that you liked in the past, Bajaj Finance, and again, you gave a call at the right times to get out of it as well. The question is, does the commentary and the result performance enthuse you enough to make a long-term investment, or do you wait for lower valuations? Bajaj Finance.
Absolutely. So Neeraj, last time we did discuss the fact and I talked about the AUM growth and also about that at current valuations, the stock is looking expensive. But I think I have slight change in stance. I was expecting the stock to go to as low as 1600, 1700 levels, where I think I would be an aggressive buyer. But especially after the commentary and the clarity of disclosure that the management has given, as a matter of fact, the management's commentary pre-results, where they talked about the stress and the problem, as a result of it, the stock had massively corrected. And now, after delivering these results and talking about the fact that what share of people have asked for a moratorium, how is the payment cycle looking at for most of its customers, I think it seems that they're in a relatively better position than what was perceived before. So my idea is that yes, it's a very, very good buy. They are sitting on huge bouts of liquidity, strongest of the balance sheet ever, and more importantly, any sort of further support from RBI or the government for the NBFCs will also benefit likes of Bajaj Finance. So I think it's better to go in a staggering manner approach. Don't go and buy all your purchases at this juncture. It's going to be a slow grind. Quarter one, quarter two aren't going to be good, but if one looks at year on year, but maybe from quarter three onwards, things will start again looking up and the markets tend to discount that little ahead of the curve. So at around 3 times FY22 price to book multiple, I believe that there is definitely scope from here for Bajaj Finance to re-rate. But again, I would say that buy in parts. Maybe there's a possibility that stock could go a little lower in a market scenario which could be bad. Then that's where I think you should be positioning yourself in Bajaj Finance.
Okay, we are minutes away from market open. Let's tell our viewers all that they need to know to stay ahead in trade today. First up, Bajaj Auto reports a revenue decline of 8.2%. Net profit is flat at 1,310 crores, which was higher than consensus as international business aided numbers. Ajanta Pharma reported strong set of numbers in the fourth quarter as exports aided top line, which rose 32.4%. Profit was up 45.3% on a year-on-year basis. Jubilant Foodworks also saw same-store sales growth decline, grow 3.8% in the quarter gone by. This despite same-store sales growth numbers contracting. The company says it expects competition to wane as COVID-19 impacts operations. Bajaj Finserv, Hindustan Zinc and Colgate-Palmolive are the key numbers to watch out for today. Aviation stocks will also be in focus after the government said air travel will resume in a phased manner from Monday. And Kalpataru Power Transmission will buy back 4.7% equity at a maximum price of 275 rupees per share, aggregating to 200 crores. So, well, we'll watch out for that as well. Now, the active names very quickly, a bit of a rapid fire with our experts before the market opens. What are the stocks that are doing the best? Interglobe is at 1,000. Samit Chavan, would you trade Indigo?
Honestly, we have been avoiding this counter of late, and still we would avoid after such a massive bump up.
Okay, that's as quick as it can be. Samit, thanks so much, and that's sage advice as well. So avoid Indigo. JK Lakshmi Sivan, it's a cash stock, Aditya, but would you trade it at all? The volumes aren't the best though.
Yes, Neeraj. Looks like there's a short covering rally. Probably it's a cash stocks or no short covering rally, but there can be a pullback move in the stock. 220, 230 on the upside is possible on the stock.
Okay, LIC Housing Finance was looking strong yesterday. It was actually a pick from Gaurav Bissa. Aditya, can I come to you? It was looking strong yesterday, looking like some bit of money off the table. If you were long, would you book the profits here?
Yes, Neeraj, definitely I would book profits. 260 to about 265 is a strong resistance zone for the stock. So if I'm making profits, out.
If you're making profits, you would book profits out of LIC Housing Finance. Okay. The other one is Jsw Energy. Results came out and the stock is about 3% higher. Again, not the most liquid of names, but Samit, can I ask you for a view on Jsw Energy?
Since stock has been consolidating, so we would wait for some kind of breakout to happen beyond 43. So 43 is the level to watch out for. Above 43, yes, stock can head towards 45, 46 levels.
Okay, Parthiv, quick answer if you can, very close to market open. We'll take the detailed answer post market open, but Bharti Infratel, what will your thought be? Is it at buy zones or would you avoid for now?
I would avoid this stock at the time.
Okay, fair call. Parthiv, stay on. We'll ask you for the detailed view on Bharti Infratel because it was such an active stock yesterday after market open. But 1 minute left, one top call from both our experts. Samit, to you first, your top call for the day today.
I'll go with pharma name Torrent Pharma, stop around 25.20 and target 26.75.
Okay, and Aditya, what about you? Your top call?
I'll stick to pharma as well, Neeraj. Cadila Healthcare buy for a target of 352 with a stop loss at 328 on the downside.
Yeah, well, it doesn't surprise that pharma would be the choice of trade. Gentlemen, Samit as well as Aditya, thank you so much for joining and giving us your perspectives. Parthiv, do stay on if you can. Would love to have an opening thought with you on Bharti Infratel as well as maybe the market at large. But we are likely to start off in the green. But I would be surprised if we do that and stay, though at the market is showing some strength. So you never know, never say never. But maybe, just maybe, there could be a small pullback before we actually resume an uptrend if we are in one. But here come the first trades. This Thursday morning on the weekly expiry day would be an interesting one as well. Could be volatile and choppy, so be mindful of that. The start is in the green, but quickly giving way and moving into the red. Yeah, almost there. The Sensex is almost into the red, really. Holding on by the skin of its teeth, really. Let's wait and watch what happens. Yeah, we are in the red now. So, bobbing into the red and the green, but no big trades. Just a flat start for the benchmark indices in the session. What is moving and what is not? So, on the losing side on the index, Shree Cement, Mahindra & Mahindra, Eicher Motors, Grasim, Adani Ports is in the red. There's Bharti and Reliance, which are correcting a bit as well in the session today. So telecom is certainly under a bit of consolidation move. What is doing well? Bajaj Auto about 3% higher, Kotak Bank 1.5%, HDFC Bank about 1% higher. So banks, I must say, are taking a bit of center stage, really. Telecom is getting pushed on the back seat for the time being right now. It is banks, because the Nifty Bank is up 0.75%. It tells you the strength in some of these indices or some of the bottom buying that we're seeing in HDFC, Kotak and the like. So banks are certainly doing very well for themselves. Z is up in the green. Dr. Reddy's is up in the green. So not a bad start for the benchmark indices, especially led by the Nifty Bank, which is up about 0.8%. What is not doing well? Vodafone Idea 2, by the way, has shown a bit of a corrective move. Interglobe Aviation up about 7%. Jubilant Foodworks 5.5%, 1604. So that start was deceptive. But yeah, it is a strong start for sure. 80 rupees higher for Jubilant Foodworks in this session. Edelweiss up 5%. Bajaj Auto up 3.5%. I already spoke about it. Bajaj Holdings up 3.5%. Suven Life about 3%. JK Lakshmi about 6.5%. So that's the nature of the names which have gained very, very strongly in the session. The Nifty is now perking up, by the way, viewers. What is not doing well? Shree Cement down about 2.5%. JM Financial, Reddington. Those are a few names that are correcting in this session. But, well, strong move by the result reactions for sure. Bajaj Auto, Jubilant, JK Lakshmi Cement, and the newsmaker Interglobe Aviation, not because of results but otherwise, are doing very well for themselves. But Parthiv, as I said, just wanted a quick view on Bharti Infratel. Why would you avoid it? Are the valuations not comforting enough, or do you believe that the business model is a bit damaged right now?
See, very frankly, not really worried about the business model. It's a great business model and it's a strong dominant player in the towers business. But I think my slight worry is the recent run up in last 2 months, thanks to the spurt in the overall telecom sector. We've seen Bharti Infratel also rally by almost 79-80%. And at current valuations, my slight concern is the short to medium term growth in the addition of new tenancies, because we know for the fact that there are a lot of tenancy cancellations happening, and one of the key customers, which is Idea Vodafone, has talked about rejigging its network and reducing the number of BTSs, and maybe I think that might have some sort of cancellation impact in terms of the tenancies that Bharti Infratel offers to a lot of its customers. No doubt the business from Bharti Airtel is very resilient. ARPUs are going up. A lot of big players like Jio does not have any problem in terms of paying the AGR dues. Bharti Airtel has not seemed to show any sort of problem paying the AGR dues. But I really doubt Vodafone Idea, who's a big customer of Bharti Infratel, to really try and squeeze out the tenancy rates for Bharti Infratel. So I think I feel that it's not a great time to look into stock like Bharti Infratel. I would go with core telecom players like Bharti Airtel, which are better positioned as compared to going with the telecom ancillary proxy.
Parthiv, any investment idea?
Yes, I think some of the stocks that we've already been discussing over the show, and something that we like in the large cap space, we did discuss Hero MotoCorp, but in the two-wheeler space, current juncture. Yes, I think it will raise eyebrows in terms of the fact that the average selling price of Eicher Motors Royal Enfield bikes are a lot higher, and at a time where consumer sentiment and demand is very low, we love the way this management tends to innovate out of all crises. And I think they held up their market share, rather they've increased their market share at a point in time where the industry volume has declined by 20%. Their volume has declined by around 16-17%, which goes to show that despite the premium positioning of their bikes, their loyal customers are still there. And my sense is once the lockdown opens, thanks to the social distancing norms, a lot of loyal customers will again flock into the showrooms and own their own two-wheelers, whether it is in the premium category or the mid category or the start category. So I think Eicher Motors at these valuations looks extremely attractive. There is balance sheet strength, there is this export growth story also along with it, and I feel if one can give 2 to 3 years as an investment horizon to Eicher Motors, it can deliver really good returns for shareholders.
Parthiv, one final question if I can. Insurance plays. Insurance is a sector that you would bet on right now?
Yes, certainly. I think in insurance space, as you know, Neeraj, we have always preferred in the life insurance space a name like HDFC Life. And luckily, I think in this crisis, there were a couple of instances where we got very good drop in the price of the share of HDFC Life, not necessarily because of fundamental reasons, maybe more attributed towards a supply or a technical reason. I recollect the fact that during this last 2-3 month scenario, once we had seen levels of as low as 360, we had seen levels of 420, and that's where I think we would have been aggressive buyers. And as a disclosure, this is a position that we in our firm and a lot of our clients own, and we are still very bullish on it. No doubt we would look into better entry points after the recent run up. And amongst the non-life insurance space, in the general insurance space, ICICI Lombard is something that we like. No doubt the company will have medium-term growth challenges, but I think a lot of negative things to be factored into, and this is also something that we'd like to hold and carry on for the next 3 to 5 years.
Okay. Parthiv, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Always appreciate having you. Okay, Deepak Jasani should be joining us any moment now. Maybe he's already with us. I'll urge my producers to me again. Okay, I think we have him. Deepak, good having you. Thanks for taking the time to us. What have you been telling your clients to do in a scenario like this? Are you telling them to add on to investment ideas, or are you telling them to stay on the sidelines because the markets could correct a bit more from where we are right now?
Good morning. So basically, these are tricky times. There is no one answer for that. I think the emphasis more should be on a lot of trading and a little bit of investing in case you are underinvested in equities. If you are fully invested in equities, I think you will get better chances to add.
Okay, so if you have underinvested, pick up the investments, but otherwise don't. Now, I want to ask Deepak, what has been the large to and fro action in the telecom space? Because I think everybody's obsessed right now with what to do with the Bharti, what to do with the Reliance, what to do with the Vodafone. One, has there been, is there continuous buying of these on your bourses? And what has been your recommendation to your large clients? Are you telling them to add on after such a big rally, or are you telling them to stay put for a bit and maybe look at other spaces?
Yeah, so basically, essentially, telecom and pharma are the two performing spaces currently. Bharti came out with good numbers, very good numbers, in fact. And Reliance, of course, Reliance Jio is not the only company. Reliance has a lot of other businesses. And Vodafone Idea has their own set of problems. They seem to be slowly coming out, but I think we have to give them a little more time before we get excited about that stock. But yeah, Bharti Airtel, I think we are quite positive on the stock, and accumulation is recommended on the stock.
So you mentioned pharma and telecom being the two pillars right now. Have you written off financials for the time being? I wish I could have asked you about Hdfc Bank, because that's coming out as a consensus in terms of valuations, but that out. What about the top quality, top ranking financials? Do you reckon that it's a good time to add them, or do you believe that leave financials alone for the time being?
Yeah, so financials are perceived to have a lot of issues, basically on asset quality. Now, if asset quality fears don't play out over the next 3 or 6 months, then probably financials will recover and will recover quite sharply. But at this point of time, I think we have to give them a little more time before we get too excited about them. The PSU banks, of course, I think are continue to underperform. The private sector banks, we have some stocks which are good, which continue to be good, and there are some others which are into troubles of asset quality and low credit growth and such like. So between the two, I think the better quality private sector banks, if you don't own them, then yeah, it's a good time to start accumulating them. But broad brush, one should wait before getting too excited on the financials.
Deepak, what has dropped out of conversation almost quite strangely is this whole fanfare around specialty chemicals, right? Before a month and a half ago, there was that one sector that everybody was talking about. Suddenly, it's just dropped out of conversation. What are your thoughts out here? And do you reckon that in these turbulent times as well, some of those companies would be able to hold fort and hold valuations?
Specialty chemicals as a sector continues to do well. These stocks are at multi-month or multi-year high or close to them, except a few of them. These stocks are still in the reckoning. So in that sense, people were excited. They took the share prices to a particular level, and from now they don't have enough visibility to push them up further. So in that sense, they would consolidate, they would go sideways, they would correct a bit, and then based on the management commentaries and the next quarter numbers, I think the next move could come. But broadly, that is a space which one should always keep on your radar.
Okay. Can I ask you about what have you guys made of this whole Vedanta delisting thing that has shaped up? Because a lot of retail clients, Deepak, are wondering what to do with Vedanta. If they have it, should they hold on to it? Can they expect a higher price? Because a lot of them don't know how would this reverse book building process work eventually. And yes, some of it may be an assumption, but I would love to know what your house assumption is on Vedanta and the delisting process.
So this delisting process is always very tricky for the minority shareholders. There have been cases where the process has dragged on for 3 or 4 years also because of the multiple litigation involved. Now, as far as this is concerned, I think the promoters have come up with an offer at the low end of the cycle. From their perspective, it may be the best time to go for it. From the shareholders' perspective, the stock price has fallen about 60-70% from their 2 or 3 year high. So in that sense, for them, offering delisting at these lower prices may not make a lot of sense. In the meanwhile, I think the stock price in the market may keep inching up in expectation of a higher delisting price. So the shareholders have 2 or 3 options. One is that they don't do anything; they just on the offer. They don't even offer in the whenever the offer opens. And if the delisting happens at a very high price, say 160, 180, 200 rupees, then they still have the option to offer them in the 6-month window post the delisting. So that is the first option they have. The second option is that they offer the shares in the offer at a high price, and in case the promoters don't accept them, the shares will come back, and in the meanwhile the stock price will tank again because there will not be this positive trigger with them, so they will lose out on the opportunity to sell even in the market. And the third option is they track the stock price very closely, and in case the stock price rises to say 130, 140, 150, and they are happy with that stock price, then they should sell out in the market. So these are broadly the 3 options that they have. The only downside is the promoters at some point of time are forbidden from the offer due to regulatory issues, due to some litigation, due to creditor issues. then the whole edifice of the build-up of prices may fall. So in that case, the stock price may come back to the recent lows. So that is the only risk involved in this.
Okay, thanks for the detailed answer. The other one is, what does one do with some of the FMCG names, the likes of HUL and Asian Paints? Both of them have been in news. Asian Paints, there's this rumored block from the Reliance stable as well, which might come in. And HUL, once the block is done, maybe the large supply is out of the way. What are your thoughts? And couple that up after that, Deepak, with what has been that top stock idea or stock recognition from your stable this time around?
Consumer stocks have not fallen in this whole carnage to the extent the other sectors have fallen. So in that sense, both the stocks which you mentioned are blue chip solid stocks with a multi-year growth opportunity. The only issue is about timing of your entry. These stocks can give you 10 to 12% compounded over the next few years. But ideally, you should sort of stagger your entry. My pleasure.
Yours, Nifty Bank, up about 1%, HDFC, Kotak, etc., driving it. IndusInd Bank too in the green, by the way. But I must say, so some of the others, and it's a very volatile market because ONGC has come off now. BPCL has come off from the highs of yesterday. TCS is in the red, and this is only the large cap space that I'm talking about. Look at Jubilant Foodworks from the highs of the day. It's come off quite rapidly too. So that's the other one that monitor. Vodafone Idea is very, very flat despite the up move day before yesterday and despite the fact that it's in the F&O ban. Interglobe 7% higher, JK Lakshmi 6% higher, Balrampur Chini about 5% higher, Quest Corp up on an upper circuit, second in a trot. So those are a few names that you've got to be mindful of. But it's a wrap on this leg of Indian Open. Viewers, thanks so much for watching.